A ship slows in a narrow channel. Insurance rates jump before the cargo even arrives. Oil traders revise prices in real time. Gas buyers in Asia begin calculating shortages. Central banks, thousands of miles away, start watching inflation risks more closely. Nothing has exploded in a major capital. No government has fallen. No global summit has collapsed. And yet the world economy is already reacting. Because one of the most important pressure points in the international system is not a country, a city, or an alliance. It is a strait. In early March 2026, renewed conflict around the Strait of Hormuz reminded markets of an old reality. When this corridor is threatened, the consequences move far beyond the Gulf. Shipping slows, prices rise, military forces reposition, importers begin to worry, exporters begin to calculate, and the wider world is forced to remember how much depends on a narrow strip of water between Iran and Oman. The Strait of Hormuz is often described as a choke point, and the term is accurate but incomplete. A choke point suggests a narrow place where traffic can be blocked. Hormuz is that, but it is also something larger. It is a structural junction where geography, energy, trade, finance, and military power meet in unusually concentrated form. At its narrowest, the strait is only about 21 nautical miles wide. The shipping lanes within it are narrower still. Through that constrained passage moves roughly 1/5 of global oil consumption and about 1/5 of global liquefied natural gas trade. That alone would make it important, but its deeper significance comes from geography. For most of the Gulf's major energy producers, Hormuz is the only maritime exit to the open ocean. Saudi Arabia's eastern oil fields, Iraq, Kuwait, Qatar, much of the United Arab Emirates, and Iran itself all depend to varying degrees on secure passage through this corridor. This means the strait is not merely one route among many. It is the main valve on a major share of the world's energy system. And once a system is built around a narrow valve, the politics around it begin to change. For centuries, the waters around Hormuz were part of wider Indian Ocean trade routes linking the Gulf, East Africa, Persia, and South Asia. But for most of that history, the strait did not carry the same global weight it carries now. Its modern strategic importance rose with oil. As Gulf petroleum exports expanded after the Second World War, Hormuz became less a regional waterway and more a vital artery in the industrial life of the global economy. Energy-hungry states in Asia, Europe, and beyond came to rely on hydrocarbons moving through a space small enough to be mapped in a single frame. This changed how major powers thought about the Gulf. Imperial navies had once cared about trade routes and maritime access. Later, the United States and its allies began to think in terms of energy security, tanker protection, and regional deterrence. Gulf states built their export models around the assumption that this passage would remain open. Importing states built industrial plans around the assumption that Gulf energy would continue to flow. Over time, a narrow channel became embedded in the structure of globalization. At this point, a simple question appears. If the Strait of Hormuz is so important, why has it remained so vulnerable for so long? The answer is that its importance and its vulnerability are the same thing. The world depends on it because the Gulf holds vast, low-cost reserves of oil and gas. The world fears it because those same reserves must pass through a corridor that can be threatened more easily than it can be replaced. That is what makes Hormuz different from a normal trade route. It is not just busy, it is difficult to bypass. The clearest historical example came during the Iran-Iraq War in the 1980s. As the war dragged on, both sides began targeting shipping in what became known as the tanker war. Iraq attacked vessels linked to Iranian trade. Iran responded by threatening and attacking ships connected to Iraq's supporters. What matters here is not only that shipping was targeted, it is how the targeting was calibrated. Even in a brutal war, neither side fully shut the strait for an extended period. Iran, in particular, had reasons not to go that far. A complete and sustained closure risked triggering overwhelming foreign intervention and damaging Iran's own export interests. This created a pattern that still matters today. Actors in and around Hormuz often try to impose costs without crossing the line into total closure. Harassment, mine threats, missile risks, seizures, and limited strikes prices and disrupt trade without necessarily producing a prolonged blockade. This is one of the central strategic logics of the strait. In Hormuz, threat can matter almost as much as action. That pattern became even clearer in 1987 and 1988 when the United States reflagged Kuwaiti and escorted them through the Gulf. After mine incidents and escalating confrontations, US forces launched Operation Praying Mantis against Iranian naval assets. The message was clear. Shipping through Hormuz was no longer only a regional matter. It had become a question tied directly to great power military credibility. Since then, the strait has remained under constant strategic attention. If you value calm, in-depth explanations like this, subscribe to Beneath Systems for more videos that uncover the systems shaping our world. In recent years, the scale of dependence has remained striking. Around 20 million barrels per day of oil and petroleum liquids have moved through Hormuz, representing roughly 1/5 of global oil consumption and more than 1/4 of total seaborne oil trade. Around 1/5 of global liquefied natural gas trade also passes through the same corridor, much of it from Qatar. The destination pattern is equally revealing. The majority of these flows go east. Asian markets absorb most of the crude and condensate moving through the strait, especially China, India, Japan, and South Korea. Much of the liquefied natural gas moving through Hormuz also heads to Asian buyers. This means the strategic meaning of the strait has shifted in one important way. The United States still plays a major security role around Hormuz, but the primary consumers of the energy flowing through it are increasingly in Asia. That creates an asymmetry. The military guarantor is not the main customer. The main customers are not the main naval guarantors, and the producers themselves remain deeply dependent on both the corridor and the security environment around it. For Iran, the strait is both a geographic fact and a strategic lever. Its coastline runs along much of the northern side of Hormuz, giving it the ability to monitor traffic and threaten disruption through mines, missiles, drones, patrol boats, and other asymmetric tools. Iran does not need to dominate the entire Gulf to influence calculations. It only needs to make risk appear credible enough that ship owners, insurers, and markets begin reacting. This is what gives Iran bargaining power under pressure. Even when it cannot sustain a total closure, it can still raise the perceived cost of sanctions, military pressure, or regional confrontation. For Gulf Arab producers, the logic is almost the reverse. Saudi Arabia, Kuwait, Iraq, Qatar, and much of the UAE depend on the strait as the main outlet for their oil and gas exports. Their economies are built around reliable passage. That is why they invest heavily in naval defense, air power, missile defense, and external security partnerships. It is also why they have looked for partial bypass routes. For the United States, direct import dependence on Hormuz is lower than it once was, especially after the rise of domestic shale production. But that does not reduce the strategic importance of the strait. Global oil is traded in integrated markets. A disruption in Hormuz still affects prices, inflation, financial conditions, allied economies, and military credibility. The United States, therefore, remains deeply invested in keeping the passage open, even if it buys less Gulf oil than major Asian economies do. For China, India, Japan, and South Korea, the problem is more direct. These are among the largest end markets for the energy moving through Hormuz. Their industrial systems, electricity needs, transport sectors, and import balances are all exposed to disruption. Yet their military role in securing the corridor remains more limited and less visible than that of the United States. Europe is less directly dependent in volume terms, but still vulnerable through gas prices, LNG flows, shipping markets, and general energy inflation. So what actually happens when Hormuz is disrupted? Not in theory, in practice. The answer comes in layers. The first layer is physical. Ships delay. Routes are reconsidered. Some operators stop moving altogether. The second layer is financial. Freight rates rise. Insurance premiums increase. Risk pricing spreads through commodity markets. The third layer is economic. Importers pay more. Inflation risks increase. Growth expectations weaken. And the fourth layer is strategic. More naval deployments arrive. More signals are sent. More room opens for miscalculation. This is why Hormuz matters so much. A local disruption becomes a global transmission mechanism. There are efforts to reduce dependence on Hormuz. Saudi Arabia has the East-West pipeline that can move oil from eastern fields to the Red Sea. The UAE can send some crude through the Abu Dhabi pipeline to Fujairah on the Gulf of Oman, bypassing the strait. Importers have built strategic reserves. Some countries have diversified suppliers. Others have invested in overland infrastructure and LNG flexibility. These measures matter. They reduce the scale of vulnerability, but they do not eliminate it. The bypass capacity available today cannot fully replace the volume that normally moves through Hormuz. Pipelines help, but only partially. Strategic reserves buy time, but not permanent insulation. Diversification reduces dependence at the margin, but the Gulf still holds vast, low-cost reserves that remain central to world energy supply. This is why the strait remains structurally important, even in an era of energy transition. The question is not only how much oil oil and gas move today, it is whether the world has built a realistic substitute for the corridor's role. So far, it has not. Seen over the long term, several patterns stand out. First, Hormuz matters because geography and geology reinforce one another. Large, low-cost reserves are concentrated in a region whose exports must pass through a narrow maritime corridor. Second, the strait's vulnerability encourages militarization. Regional actors invest in deterrence and disruption. External powers invest in patrol, escort, and response capacity. The waterway becomes more important and therefore more contested. Third, most crises stop short of a total sustained closure, but still produce major effects. This creates a recurring pattern of calibrated disruption, enough pressure to move prices and politics, not always enough to produce complete shutdown. Fourth, the consequences are not evenly distributed. Asia bears the heaviest direct exposure because it receives most of the energy moving through Hormuz. But because oil and gas markets are global, price shocks and financial stress spread far beyond the direct buyers. Fifth, the world has mitigated some risk, but not solved the core problem. As long as Gulf hydrocarbons remain central, and as long as the main maritime exit remains narrow and exposed, Hormuz will continue to function as a pressure point in the global order. The Strait of Hormuz is often described as a bottleneck. That is correct, but still too narrow a description. It is better understood as an instrument panel for the modern world, a place where several hidden dependencies become visible at once. The dependence of importers on cheap and steady energy, the dependence of exporters on secure passage, the dependence of markets on confidence, the dependence of military strategy on geography. This is why a narrow waterway between Iran and Oman can influence shipping decisions in Singapore, fuel costs in India, inflation forecasts in Europe, and naval planning in Washington. Not because the strait is symbolic, because it is structural. The events of early 2026 did not create that reality. They exposed it again. A local military crisis entered a narrow corridor. That corridor touched the flow of energy. The flow of energy touched prices, trade, finance, and diplomacy. And once that chain reaction began, the world was reminded that some of its most important systems still pass through places that are fragile, contested, and hard to replace. The Strait of Hormuz remains one of those places. Not simply a passage on the map, but a narrow space through which global power continues to move. If this video gave you a clearer way to understand the world beneath the surface, subscribe to Beneath Systems for more deep dives every week.